Hey everyone, welcome to Financial Barry channel. This is episode 2 of Dividend Growth. In this video, I'd like to introduce you to my dividend growth portfolio. I chose M1 as my trading platform to do dividend growth portfolio. There are good reasons as to why. First of all, they charge zero commission, so you can trade as many times as you would like. And there's no set amount that you can invest in. So I can buy fractional shares. So whether I have $20 to invest or $2,000 to invest, I can just invest whenever and as frequent as I want to. Also, the platform has this pie concept that really makes it easy to invest in multiple sectors. Being a dividend income investor, we need to have a diversified portfolio. So this makes it easier to manage and rebalance and reallocate money across different sectors. And lastly, M1 is a good long-term focused trading platform. And why would I say that is because there's you cannot buy stocks instantly. There's only really one window of time you can buy stocks, which will be 9:30 Eastern Time when the market opens. If you sign up for the Plus member, then you get an additional trading window, which will be later in the afternoon. So at most, you get a chance to buy in two time frames per day. Now you're looking at my current portfolio on M1. I started investing in May of 2019, so it has been about 18 months since I started investing. This is the breakdown of the funding. So in 2019, I was able to invest $138,000 of my own money. And as of last year, 2020, I invested about $79,000. And for this new year, 2021, so far I have invested about $50. Now, if we go back to portfolio, I can show you that since 2019, May of 2019, I have collected about little over $7,000 in earned dividends. Now, if we break it down to just what happened within the past year in the 2019, you can see that I have earned about $5,281 in dividends. So if you take a look at the net cash flow, if you can recall, I invested about $79,000 of my own money last year, but because I reinvested earned dividends on top of that, net cash flow onto the portfolio is actually at about $86,000. And this is exactly what makes dividend growth investing fun for me. If we take a look at the past month, in the month of December, I have collected about $650 in earned dividends. If we go to activity, what I'm going to show you is I can just filter by the dividends I collected in the month of December. And as you can see here, on December 31st alone, I don't even know how many rows of dividends I collected, but on December 29th again, I received about this much in dividends. And on the eve, I collected dividends again. And on December 18th, I collected dividends again. So as you can kind of see that almost every day, I'm getting some kind of dividends here and there. So just in the month of December alone, I have collected about all combined is about $650. in dividends. So as you can see, collecting dividends are great, but I'm also looking to increase the portfolio's value by market gain as well. So in about 18 months, I gained about 29%. And this combines both of these numbers, market gain and the dividends. And as you can see, market gain is much higher than the dividend. So that will be the main objective here of my portfolio, is to invest in stocks that has the biggest potential to gain stock appreciation. And if they pay out the dividends, that's exactly the kind of companies that I'm looking to invest. Now, if you look at my performance last year, you can see that I gained about 16%, which is very comparable to S&P 500, which also gained about 16% last year. My goal for this year is to beat the average index. If you go back to my portfolio again, I can show you the breakdown of my portfolio. So as you can see, I'm invested in multiple sectors. However, I'm not invested in all of the sectors that are out there. As you can see, I'm not invested in communications, materials, and energy sectors. Technology takes about 35% of the entire portfolio, and then the next biggest pie will be consumer staples at 11%. And then I have financials, healthcare, real estate, and discretionary that takes up about 9% each. And then my smallest holdings are utilities, industrials, and ETF. Let me sort this by the returns. As you can see, I have been really successful in technology, utilities, healthcare, consumer staples, and discretionary. On the other hand, I'm actually losing money in real estate and industrials. However, I expect to be positive in all of these sectors because I believe in them. In the next episodes, I'd like to walk you through companies that I hold in each of these sectors and tell you why I think these will be great investments. Please don't forget to like and subscribe. I'll see you next time then.